All right, a very quick one. Just for us that want to be trading by ourselves on our platform. Of course, the whole essence why you are on Capital on Plan B Express Cash Flow Solution Club is to know how to navigate the market by yourself. But of course, we give you all the support required, signals, and all of that. If you've not gone to the basic or basic beginner class on the platform on the Telegram, please quick, you have to create time, maybe a weekend, and dedicate that to go through some of those trainings. This training is especially for, I'm going to do two things. General trading format is not different from normal market structure you use, and then specific trading format just because of the boom and crash and pain and gain. So we want to scalp. I'm going to give us a strategy. So now let's go. Now on the general trading, so I'm going to use Weltrade. And of course, how do you arrive at getting Weltrade tools? I think if you go to the beginner course, you're going to find that. I don't need to start doing that here. So by the time you go to tool and you're going to see trading view chart, if you click on it, you pop up this way. Now, I, Felix, have my setup normal on my, on my platforms. So I have some on RSI base and some on MACD base. So let's look at the chart plainly. And now, most time, I always recommend if your money is very small, all right, limit your exposure to just face more of, what's it called? Just a moment. Okay, so just limit your exposure to so I'm going to show you, like, I don't trade flip one, it just disgusts me. But let me just open it and so we can see. Sometimes it could have a very beautiful structure. First, take warning. The first warning I want you to take is that if you want to enjoy Weltrade Synthetic, trade it more on higher time frame, do your analysis on higher time frame, and to find an entry. Now, if you look at this market, this is an uptrend, so it's not difficult. All you want to do is to identify the trend, which is directional bias on the trend. Now, by the time you go to too many lower time frame, this can twist you around. So if you look at this market now, these are an uptrend. But if I squeeze more back, you're going to see that all the places you are looking at is still a different thing altogether. So let's take from here. We're going to be starting from here. And so if I start from here, I'm going to look at as the what bottom out here. All right. So if that's what bottom out here, so what the first thing you're going to look at, we talk about the trend of the market. So the last break of structure or the recent break of structure. So you have a recent break of structure here, and then give and take, you have this as the high that caused the break. Very simple on daily time frame. So this is very beautiful, right? Okay. So now what you have is this break of structure, we have this, and this is what brought about the total break, this one. And the first thing you want to do, if I want to work on that higher time frame, before I will go to a lower time frame, perhaps, so you are going to go to a lower time frame if it's going to form a total reversal. So ordinarily, this is the high and the low, which is like my dealing range, perhaps. All right. So now, but that the market has changed. I'll have a market structure shift. What you want to find out is where is it likely for me to enter. Now, not to complicate things, if I'm going to work on a higher time frame, I'm going to take my Fibonacci retracement and I take from the low to the high of this swing. Now, of course, one of the things about Weltrade is that you keep resetting this once he log you out and all of that. My setting, so you can take note of this, I'll always use minus 23 on this, and I come back to this one and use minus 0.5. I will explain to you what those points are for. Okay, then I disable this and disable this and disable this. All right, so you're going to have this other remaining one, and then I'm going to take off the background. So you want to come to remove price and then probably use percentage and turn it to the right hand side. All right, then of course put it at, yes, at the center. Okay, so very simple. Now I probably want to maybe make the line thicker, and so very simple. So I've gotten everything properly right. So what I'm doing here is this. I can extend this one out so that I can see boldly written. So what you're doing is that here is a break of structure. All right. So this is a break of structure, and the high that brought about that. So what you expect was that markets will actually return back to this, which you call this point area of focus. So here is the market you want to come back to so that you can sell and to be rejected. But unfortunately, that never happened. And then the market broke and then give another new high. So this new high is why you measure from here, expecting where is the market going to return back to find an entry. So probably you may want to change this color. I love giving my 50% ratio to be green. And so I wonder what happened. So 50% retracement to be green. What's going on here? How come I'm seeing red? -0.5. Oh, okay. Minus. Good. So, all right. So now let me quickly explain my minus to you. And my minus is simple. What do I use my minus for? I use my minus for so many things that many people wouldn't understand. I use this first minus 25 as my first take profit, and this second minus as my second take profit. Okay. Now, so let's go. The market has actually changed structure. Then you are looking at most time by standard. Some people don't use 38, but I use everything. So some stand by the standard of only 60 and 50 and 61, of which is supposed to be the dealing range, meaning that you want the market to actually come to a discount for you to find an entry. Okay. Then some extend it to 78, which is still okay. Now, so if you look at it now, so what are you looking at? They're looking at this market to return back to this point. So there are a few other things. Maybe you have another block. So here is another block. And now here's another one. So, but of course, this, I told you how this market can be very funny. Now, when the market has returned back here, you have found this. So probably, but me, I will have found an entry before now because I probably could use 4 hours and find an early entry for that. Okay, so let's go. Oh, okay. So you can see why I actually recommended that you should use higher time frame. Now, so don't mind all of this. Remember, this was already there before the break of structure. Now, one of the lovely things is that when you have another block and you have some liquidity area, so you can actually hesitate to see a sweep of those liquidity. Now, so the market return back. So this is the break. You can see going to your higher time frame makes sense. Now the market has returned here. If I don't want to waste too much time, I use part of 3 for my entry. Am I going to go for that? Perhaps because this instrument does not have much volume. So I saw this candlestick, and then this is accumulation, and then the second one lower than this is manipulation. So at the close of that candle, ordinarily should form my entry. And then I'm going to take a long position, and then my stop loss below the wick, and then target where this high. So that's the external high, and that's going to go to like 1:6 risk reward. That's 1,000 points. But that's not all. Now, sometimes you probably wouldn't find a proper entry on time. You can go to 1 hour. And so by the time you go to 1 hour, you're going to find a different thing. Now, what you find here is snapper entry on 1 hour. Remember that if you look at when this market actually break, this is a break of structure. So now this break of structure on daily time frame, when it break down, you actually want to see that because you already marked this point because you anticipate. So let's go back. You anticipate that the market was going to come back to this point as a kind of, let's go to 24 hours. That's daily. Now, so what happened is that when the market actually broke this, look at it. So this is the breakout structure. Now you've already marked this as another block that you expect the market to come back to. So let's take this down out, for instance. So you expect the market to actually come back here. So in the process of it coming back, you can counter trade. So counter trade, that's counter trend the market, and then I'm going to go to a very good lower time frame, and I can find a beautiful entry. All right, so that's buy and selling. So let's go to 1 hour time frame before we will finally get to 15 minutes. Most time, like all of this instrument on Weltrade, may not give you those kind of market structure you are looking for, just like in the forex market. So they are more very kind of confusing to an extent. All right, so you have to be very careful about them. Okay, so now let's go. So this is 1 hour time frame. Now, if I want to work with 1 hour time frame, it's simple. This is a breakout structure. Now, when it change structure or direction, it's now tend to I want to find an entry. You can see this is a breakout structure. This is a breakout structure. Then internally, you have this, right? So you have this as a shift in market structure. Then you probably expect the market to come down to any of the any of the area of focus. That is AOE, AOF. Now, if that is the case, you have so many places here. Look at it. This is a demand zone. This is not another block to an extent. So sometimes you can call it other block and all of that. So you mark all of those points that are counteracting. But another thing, of course, you want to do is to still take your fib from the low to this recent high, all right, and see when the market actually travel back to 50, 61, which is very nice here. And now, even on 1 hour time frame, I can take this trade, and I'll explain to you why and how. Now we have power of three. I told you I use power of three a lot to enter market. We have power of three, and so this is accumulation, manipulation, and distribution. Some wait for the close of this candle, especially when the candle is going to engulf the other one before they take their trade. I take sniper entry, and then so I'm going to look for a trade when this candle actually close. Now at the close of this candle, so it's going to be beautiful for me to even go lower here. If not, some will go as tiny as this point, and then that's it 3 point and taking the trade. So of course we're going to be targeting that up here, right? Because that's the place you expect the market to come to. Okay, so if that's the case, so we're going to have 1:15 risk reward. So depending on how much you engage into the market, that will determine how much you're going to make. So now if I step down to like 30 minutes, 15 minutes, you can find more, but sometimes when you go too low, because of these guys do not have so much data, just like forex market, so you have to be very careful. All right, so let's go back there. So 30 minutes and then 15 minutes. Because of this stress, I may not go to 15 minutes because this is going to take so much of our time, okay? Yeah, so let's go here. So I think you could still find out that it's the same thing here. Yeah, so 30 minutes, you find out this point. This is a breakout structure, and what brought about that was actually this same high, and then you want a bull and all of that. So, but I can go down to as low as 5 minutes and find a proper entry on time. Now, so this is a beautiful thing I want you to understand. If we return back to 4 hours, for instance, now even on 1 hour, if we return back to 4 hours, for instance, or 1 hour, having find a trade, right? So you expect that the market should get to this order block and get rejected. It actually poses as if it has rejected that, right? Now, but there are other things that you will want to understand. So here you're taking your profit, okay, fine, and then the market keep creating liquidity, and then finally broke this. So breaking this is what's going to take you from the swing low to this swing high to measure where the market is going to return to. That's where you find the second trade. Okay. Now, if we go back to the daily time frame, that's 24 hours, you're going to find the same thing on the structure. Now, so the structural movement is now going to form this. So let's take off this. So that means here become a breaker block. All right. So now, if that's the case, so let's do something very quickly. The market now broke new structure. Haven't take your entry. A new structure was broken, which you take here. Power of 3, push it back. So what do you want to do? You want to look at, we have order block here. We have breaker block here, which was at this point happened. Okay. Now, but this is the point. You want to still take your fib level, not from here any longer, but from this low that give birth to this high. So if that is the case, you can see that this one actually traveled down to this point. What does it come to do? There is a big fair value gap here, and then it comes to mitigate from time at 50% point of whatever. So if you return back to a lower time frame, you're going to find another entry. Makes sense, right? Very simple to find trade this way. And then, so this was a breakout structure. Then we have another breakout structure. Do you get it? Now, this is another breakout structure, very beautiful. Now, when you want to enjoy this stuff, don't trade too many lower time frame. It's going to take your time and it's going to give you wrong interpretation, right? So we'll find again from this swing low to swing high. And then what we have, so you can see when this one traveled back to this one so much. Now we still have this breakout block that was here before. But this time around, you're looking at your other block here, this one. Get it here. Very fantastic, right? Now, even on daily time frame, there's one thing that happened here, but of course, you probably may not wait for that second day. But let's say when you come was actually the second day, okay? You know, now the market didn't come here when you have drawn this one, and then this your other block, you have find us, okay, golden ratio and all of that. So the market actually, this is a liquidity void, and we come back here and we have what we call power of 3. I think this instrument too may like power of 3 because I've seen it almost repeatedly right now. So here at the close of this pin bar is my entry, and funny enough, it came to area of focus, so which is 300 and something point, and of course 1:2 risk reward, or targeting this external high. So that's 1:4, right? So you just see how beautiful, because this just formed like a textbook format. Then you have another breakout structure, amazing. There you have there. So here, then what do? You look at your, this is another block, but this is a demand zone. So you have to understand, because you probably will be waiting for someone down here, but look at this, it's an area of interest. So the market actually traveled there. Another power of 3. I think these guys love power of 3 so much. So you have that. So I'm not doing this so much because I don't want to go to lower time frame here. That would take much of our time. Now the same thing, breakout structure. Now this breakout structure, you can see what happened. The market continued to move. Now this is what happened here. This is the breakout structure. The market travel up here and break another one here. Now, so you continue to have a kind of movement, so which you have this as an area of interest. So you have to understand sometimes dynamics of the market, and then until we now have a new breakout structure. This one, work with this, but now let's go. This is a new breakout structure. Here you have this breakout structure on your daily time frame. Look at how massive it went. So you're now looking at number 1, you have your fair value gap here. Sorry, another block here. Then you have this one, but you have a fair value gap here, invariably here to this point. Do you understand? So this is a fair value gap. perhaps that's what the market now come to what? To respect, if I'm not mistaken. Okay, so we have another one here. So that's why the higher time frame make more sense for you to, then you have another power of three. I think this guy respects so much of power of three as crazy as possible. Go look at it here. This is a power of three, and it's a very powerful strategy. Now, all of this one is none of your business. So all of this one are like internal liquidity or internal structure. Now we have a new break of structure. So you have to understand where are we going to get to attrition level. So here is a new break of structure. So you have so many places here. So this is a down point here where the market you expect to come to. All right. So you have to recognize that there are other points here again, which is here that the market could push back to, and you want to find a new buy, or perhaps down here for you to find a new buy. So can I buy now? The answer is no. Can I sell? The answer is no. You wait, depending on where it's going to travel to, and when it return back here, you're going to find an entry. So this is a general format to trade, even so normal in forex trading, and then you want to trade, um, the synthetic market, as it were. So let's take other instruments you're going to find. Sometimes I always tell my friends, I said, when I'm going to trade and I take one of my instruments and I see does not give me a very fantastic outlook, I just abandon it. Okay. Now, so if you look at this guy here, we have this market that created an advanced setting. I may not have to teach this setting here, all right? Because if I'm going to teach this setting here, it's going to be something longer. Okay. So, but let me just take another instrument, simple strategy that you can always use. Now, I always say when the market is not too defined, just abandon it. But look at this type of market now. If we return back here now, so that means you're going to take it very choppy. Do you understand? Because it's actually creating structure because this is daily time frame. So we have to create an extension. So we have a break of structure here. It never returned. This is a break of structure. It came back though. Then this is a break of structure. So we want to return. So that's to say here, this market will still continue to sell. That's what it is. You understand? So you have probably here or here. So that means you're looking at when the market will return back to this top here. So it has actually done that. So sometimes some of this type of trade, I just avoid it instead of going towards too many. There are too many things to be done and make money than wasting too much energy on one thing. All right. Now let's take this as the current trend. Now, so if I work on this one, that is a current trend. So what we have here is a breakout structure. All right. So then if it's a breakout structure, then what you have here is a market structure shift. So if that's the case, so this is the high. So I can take my Fibonacci retracement from the swing low to the swing high, and then to find where will this market return back to. Remember, we are measuring this, and this market actually returned back to this point, which is the 50.61, and they reacted. We have power 3, I think was forming that. You can go to lower time frame to find some other segment of entry, and then you can find your entry targeting this high, which was very fantastic. And now we have another one here coming there, and then this is a break, and then you have another block here waiting to be mitigated, which you have here. All right. So then the market, so you can take here. So this is the high. This is the lower high to the low. So if I'm going to take my fib retracement to just find my PDRA, so it's going to come this way. Then you have it return back to this point, which is inside the other block, seated in it. They are always fantastic. And now you have this formed and make a lot of sense. Find an entry, target this high. Now let's go back to this one. You have this point here, another breakout structure. This is fantastic. Then let's take this one that have been mitigated. Then you have a new one, an unmitigated other block, a fresh big other block. So here the market has come down to this point. This makes sense. Now this we're going to go down to lower time frame. Let's first of all go to 4 hours. Remember, we're working within this PDRA, okay, within this point to this point. So the market has traveled down. Now on 4 hours, do I want to take a trade? Why not? I probably want to take a trade when I find I use part of three a lot in an area of interest, and that happens here. Very fantastic, right? Sweep of liquidity, and then bounce into the other block, and even the other block on 4 hour time frame is sweep liquidity and double into a fair value gap. Make a lot of sense. So that means this trade, what am I going to do? You do nothing because until all right, sorry for the break in transmission, and so it was just interruption of power supply. So we have here, so this is the entry ordinarily. So sometime I don't want to disturb myself. You can take time to find a trade in this market, but once you find it, all right, so this is my entry after the close of this candle, okay, because this is my area of interest. Now, some people want to be more conservative and take to this low. All right, so like I was saying, so here you have this, and of course, you target the external liquidity. So this is a draw of liquidity, and that's where you are targeting, maybe as your first take profit. But sometimes our rule, remember, is 1:2 risk reward. So if you are targeting 1:2 risk reward, could be somewhere here. And now, but of course, you open more than one position, and then other point can be there. But remember that you still expect that this market is going to break structure above, or do not actually break structure above. Now, so if you go to lower time frame, again, 1 hour. Now, sometimes when you go to all of those lower time frame can be too much noisy, and so that's why you don't want to go. But if you go, the beautiful side of going to those lower time frame, it give you a sniper entry. This is a sweep of liquidity, and you have into the fair value gap, and of course you have mark on the higher time frame. So if you go to a lower time frame, now we can still find something similar to power of three here, and then that can reduce your, your stop loss, and you have higher risk reward ratio. Now, so even going down to 5 minutes make a lot of sense. So by the time you're going to 5 minutes, 30 minutes, 5 minutes, 15 minutes, this is what we're going to do at that point. Okay, I love this because I need to now show you when it comes to your point of interest or area of focus. Okay. So when it comes to your area of focus, they're very simple. Now let's go down here. So let's squeeze this. So we have a sweep of liquidity at fresh, and then where you have this. This was the like last sweep of liquidity when you have this, and that's the break of structure, massive one, right? Now, so you have this high. Let's go this way quickly. So it's the same thing you're going to be doing on your it's the same thing you're going to be doing on your, call it for me, on your derivative synthetic. I've done a video on derivative synthetic before now. Now, you were targeting this high, but something massive really happened here. What really happened massively here was that we have a break of structure, and then we have a return to the market up here. So that means we create a new high. So not waiting on this, guys. So if that is the case, so let's say this is a new high. You get it? So because if it's a new high, so what happened? This is here, a low, a high, okay, and a low. This is a lower low, this is a higher low. This market structure shift. So I want to look for entry and see what I'm going to do. Very simple. Take my Fibonacci retracement, and I take from this swing low to this swing high. So when I take it this way, from this swing low to this swing high, I want to find a proper entry or working with this other block. And for working with this other block, and then working with other things about the Fibonacci retracement. And this is a golden zone, and that the market actually happened at the golden zone. So if it happened at the golden zone, so I don't have any more stress. This is power of three. And so at the close of this candle, this will actually be my entry. Do you understand? So where if this market is my entry here, look at what happened. My stop loss, if I like, I can still put it here anyway. But some sniper entry trader, this is what they do. They're going to take their entry here. Look at it. The candle actually close here. I hope you know that. So this is the close of this candle. Because you are trading this market, you're following up the market. So if I just go below that, that's going to be this, right? But if I still want to go just below the last low, this is going to be this 140 point. And then, of course, you want to look at the first take profit, target this high, which is above 1:2 risk reward. Now, it depends on what loss size you're now using or what you want to allocate to your trade. Of course, you can do those calculations. I'm not going to go too much on that, okay? Now, look at it. What happened? The market continued to move up, right? Now, so if you look at this market has moved up, broke a structure, and create a high. So now this trade still continue. You understand? Because maybe you enter 2 or 3 positions. Now, what happened here is very simple. So the market now broke a new structure. Now, this is not your structure you'll be working with now. You're going to be working with this one, and this one. Okay? And now, so that means I want to look at where will the market now return back to. So I'm going to take my Fibonacci retracement, okay? And then take from here to this swing high to get where I'm going to be looking for an entry. Look at 61, right? So at a point, the market, so this is why most of the trader don't always like to put this one. So they removed 38 because they said when the market did not come, the whole essence of looking at Fibonacci retracement is to find what we call a PDRA, discount and all right, discounts and premium. Okay, so the premium and discount level, and so you have this point, and then you could have other point here, which is kind of like a breaker block, and so a mitigation block, so whatever. So you have the market return back to this point. All right. Now this is a change in state of delivery because this candle actually engulf this. We have different pattern of power of 3 that I've taught. If you go to my video, you're going to find that there. So that means your entry now after this engulfing candle is your entry. So ordinarily, if you are adding to your position, remember you have taken some profit. If you're adding to your position, that means you took another entry here and the stop loss. Of course, you can just take it below this low here, this one, all right? And then you take your 1:2 risk reward, depending on what you're targeting. But remember that this is a continuation, right? So this is a continuation, right? So we're going to go back to a higher time frame. Let's go to 15 minutes so that you can see this is how we're actually taking, okay, this is actually a reversal. This is how we're actually taking into the market. So your target is going to be up here. Now, so if you ask me now, you're going to ask yourself some questions. Oh, so how do I manage this trade? That's where we talk about trailing stop loss. Now let's go this way, extend this one this way, and extend this one this way. Okay, so let's do this extension. Then let's do this extension. Now, see why when we're taking trade, so I can be taking like TP over and over here. Now, if you look at this, if this market is going to hit this high, what are you going to have? That's going to be 1:26. This is how you maximize, and you say, how do people do to do this 1:10, 1:20, 1:50, and all of those things? Do you understand? So look at the market to continue to this up. So if you're able to break this, now you're going to be massive, 1:17 risk reward and 1:. So let's say, okay, this is 130 and this is 191. And so 191, so let's say I want to risk $10. So 191, so that's the point, I'm correct? So if you look at it now, 191, so let's say you use 0.1 or 0. Yeah, is this 0.1? The minimum they have is 0.01, something like that. 0.01 multiplied by 191. That's just $1.91. So, and then you want to use $10, okay, something like that. So let's multiply by 5. So that means you're using 0.05. 0.05. So multiply by 191. Oh, yeah, that's about 9.55. So you're using 0.5, 0.05. Now, if you use 0.05 or 191, and there you go, so 0.05, and you do 3,444. 3,444. Let's go there, ladies and gentlemen. 3,444, right? Multiply by 0.05. That's about $172, ladies and gentlemen. Crazy, right? That's amazing. And that's one of the things you benefit. So imagine this one 131 or 130. Let's call it 135. So let's say you want to use 0.1. All right, 0.1 at 191. So let's say 0.1 multiplied by 191. So let's call it 195. Okay. So that's about $19, guys. It's not much. Okay, $19.5, ladies and gentlemen. So now let's go there. So, and then there you go. You now do 3,444. That's crazy, right? Let's go there. 3,444 multiplied by, yeah, 0.1. Up with 300 and something dollars. Sweet. That's powerful. Now, so this is how this actually works. You have to work with price action. So all of those inducements, you don't need to let it bother you, because by the time you go back to like 4-hour time frame, you're not going to see all of this fear unnecessarily. After all, you have used your stop loss and you've already told yourself how much you want to lose to the market. And that's how simple this market can be. Okay. Now, so I'm sure this is the same thing. Now, I think I need to just teach two in one, because the second thing is now the same thing applied to, all right, gains and pains. Okay, so trade it on higher time frame. Then if you want to scalp it, I'm going to give you strategy for scalping it. So the same thing, I'm sure you can draw your market structure right now. So, but I always don't want to sell. But if you are watching, if you are trading it on higher time frame, you can sell, of course, when it is, because when the market structure is playing out, you're going to be fine. A time come, look at it, a time come where you are not even going to, this 2024. So a time come where you are not going to bother. You only come back when they pull back, you enter. So now let's look at it. At the beginning, okay, by June of this year, now we have a breakout structure. So you can do this thing I've just taught you here right now. So you have a breakout structure here, okay? And then, so this is the high. So that means we have a market structure shift. You understand? So we have a low here, we have a high, and this one, take out this, just like a sweep of liquidity, and then we have a high. That is market structure shift. Then you're going to take a Fibonacci retracement and push from here to this swing high, right? So remember I told you I've taken 38 away. And so you want to see the market return back to the origin. And so the origin tool combined with your Fibonacci retracement tool that you're doing. And so, excuse me. Okay, where are we? Okay, good, fantastic. So let's go this way. So this is your origin, which is your order block. That is bullish order block that was unmitigated. So this is going to take several days. That's one of the things I've discovered in this market, because this is daily time frame. So look at this candle: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. That's take about a whole month. You understand? Yeah, that takes a whole month and all of that. So what I'm doing now, you can still do it on 4 hours. So imagine you have done this on daily time frame. So when the market come here, I think these guys still respect part of 3. You can see that here, and then probably we'll go back to a lower time frame. So the same thing, I'm going to go back and then do the same thing on 4 hours. Probably 4 hours may be your best point of market. So you have this now. Then after this is a breakout structure. And so you take the same thing, the same process you adopted here, and then you come over here to this swing high, and then you saw the market. This is a fair value gap. Then we saw the market actually give you your entry. And so, of course, when you go to lower time frame, you want to see some trigger. But let's quickly look at 4 hours. That's going to give you entry on time. but you have to be careful too when you are using 4 hours because of the time frame and the nature of the markets that do not have so much volume to play with. Okay, so if that's the case, if you look at it now, so you can see now that you're going to be so confused here because at this point you will say the market has actually reversed. You know why? Because let's look at it critically. This is a breakout structure, a recent breakout structure over here. So this is a sweep. So we can see another break here. So if that's the case, so let's go here. We see a main break. So let's take out this one and then look at it now. So you're going to be confused here. Look at it here. So this is a high. So you swing high. You take your fib here. Invariably just came to cause a double bottom. But there's something here, a candle pattern that form here is called 2 is a down. That's a sign of reversal. Okay. So, but you have to look at it. So coming to too much lower time frame cause a lot of problem and all of that. So I'm not going to go too much detail about that, but you can take another instrument to check how that one too can play out for you. So if you look at maybe 800, that gains 800. So the same pattern you can play out. Now, let me quickly give you a scalping strategy. Now, this has nothing to do with trend, but if you still work out with trend, um, trend is good, but I'm going to give you 4 hour scalping strategy, both on gains and pains. Okay, so pay attention. How does it work? I think I need to separate a different video for that. So you can see the same thing I've just talked here is what we still use on Weltrade Synthetic. I've taught that. You are going to go into your platform to study that and see how it actually works. Sorry, I need to check markets that we took in. Okay, amazing. All right. So now the next episode. Okay, let me just take it together because no time. So scalping, the best scalping strategy for gains and pains. So watch a 4 hour scalping strategy. So this is how it goes. You know, you're going to be trading, taking spike for bull for gains, while drop for pains. So let's go. So every candle 4 hours close, you wait for it. So this is 4 hour candle close, right? So this is I can do countdown time. So just right click and look at, let's see, countdown on bars. So that is about 2 hours ago was when this candle formed. So let's take this previous one. So now you are going to take your vertical line so that you can identify it, the new 4 hour candle. And then you go down to 30 minutes. Okay, so go to 30 minutes. Step one, you identify. So step one is to identify a 4 hour candle, the close of the 4 hour candle, and then the open of the new one. All right. So that's very simple. Now, if that has happened, you have identified it. So what you want to do is that you want to mark. So the close, you want to mark the close. Okay. You want to mark the close of the 30-minute candle. That is the body, so not the high. So the body, which is the close here, this is the close. Okay, so first of all, you identify 4 hour candle. So it's 4 hour scalping strategy for pain and gain, boom and crash. So when you mark, but it's always good. So when you mark the first 30-minute candle, let it be bullish. So when it's bullish, you can lose trades to understand on this. So when it's bullish, as you mark the close, then you travel down to 1 minute. So when you travel down to 1 minute, look at what happened. This is what you want to do. What you want to do is simple. You get it now? So as you travel to 1 minute, the first candle that closes, above that line, you take the fib level. And so let's go on that fib level. So this trade, you're going to lose it. So let's go. Why? You're going to take your Fibonacci retracement from the low to the high. So this is the candle, the first candle that spiked, okay, above. So since it closed above this, your target is that you are going to take an entry at 50% fib level. Now, there's something here that's going to be very significant. So you have to add another number here, 1 point. So you're going to add 1.35. So your stop loss is going to be here. Now you see that you're stopped out. You want to catch just 2 spikes. Okay, you want to catch just 2 spikes. So now that you have done this, look at it. You've marked the to this. That is from 50 to 75 or 78, whatever. Now you can take 2, 3 positions depending. 50, 60, 50, 61, and 71. Now your stop loss, or let's return back this guy. So your stop loss is going to be here. So that means you have taken a trade and then, of course, looking for spike when the market gets there. So you can do a limit order, okay? Then, right? Can you see now? Limit order. So you just want to catch like 2 spikes, right? 2 spikes, and then take your profits. But look at this happen. Something happen here. Markets, return back here. You lose this trade. Okay, so if you lose this trade, I have a little strategy that I use in taking this. Now we return back to 30 minutes and return back to 1 hour, right? So let's go to 30 minutes. Now, so since this now happened, you're waiting for the next candle, right? The next candle that will close bullish. So this one was bad. But there's something like, some of us who trade, we have a tweezer down here, equal low here, and that's going to take your entry. Probably when you go to 15 minutes, you will have find a trade there. But I don't want to miss this strategy unnecessarily like a blunder. So we're going to that 30 minutes, so I can move into the next 30 minutes because this is another 30 minutes. This is another 30 minutes. So this 30-minute close is bullish. So I'm going to mark the close. Let's go. Let's mark the close of this bullish candle. Do you see that? So marking this, you're going to go to, let's go. So we're going to go to 1 minute. Or even when this candle closes above this. So you can still take your trade like this. Let's go to 1 minute. Return back to 1 minute. Now this is the first one we drew. So if you go to your 1 minute here, excuse me. Okay, so this is your 1 minute. So where is the candle that closes above this one? So sometimes this can move you behind, and because by the time you mark this gentleman into this point, so it didn't return back to your fib level, and that's you missed the trade. Okay, so we'll have different ones. Then so let's take another one, maybe 1,002 gains. Then you can, so let's try pains. Okay, now let's go to pains. So we're going to 4 hours, right? All right, so this is gains. So the recent candle close and the new one open is this. So I'm going to take my vertical line and go to this. So then we go to 30 minutes. So the first candle close, the first 30 minutes were bullish. So that means we're taking this way. Are you getting it now? 30 minutes, you mark the close of the first 30-minute candle close. So we'll go to 1 minute. So in 1 minute, where is the first candle? So that spike above this, the first spike, that spike above this close of this 30 minutes. So this is the candle. So what do? You take your fib level, excuse me, from the low to the high. So once you take it from the low to the high, so you are waiting for what? 50%, 61%, 71%. So you can take 3 trades, maybe small lot size of it. So taking from here, you get it? And your stop loss will be here. So can you see now? So just to catch like 2 spike as it were. So your stop loss will be here. So let's take risk reward. So probably here. And then your stop loss will be here just to protect you. Not that you are even doing any risk reward ratio. So, but if you're doing that, it's going to still be another thing anyway. So 2 spike and all of that. So you've taken that. One took one enter, the second one did not enter. So as the one that entered, then that's giving you your profit, you're good to go. Now, but if you look at it, the market's to return back again into the 60 and then travel back so much and all of that. I have different strategy of catching spike and then selling the crash that you can maximize on 5-minute time frame and all of that, and you are going to make a whole lot of money. So, but this one is very simple. You want to just do the scalping, catching this, catching that, you're going to make a whole lot of money. Okay. Now the same thing you do it to pains. Let's look at it on pains. All right. So let's go to 4 hours. Remember? So go to 4 hours. And then on 4 hours, all we do, it doesn't matter what type of candle is that, okay? So let's take this. Remember, if you didn't find a spike, you didn't have a trade, okay? Because this is capping. That's to base on rule. This is the previous candle close. And then you want to go to 30 minutes. So the first candle, the first 30 minutes was not bearish. So you don't have a trade. Do you understand? So, but of course, by the time you are doing normal market structure, you find a trade here because there are some things you're looking at for here. But as this one didn't give you that, you don't have a trade. So once you don't have the first 30 minutes to be in the direction of the crash or the pains, then you don't have a trade. So let's look for 400. So pains, marvelous. So that you can see now that ordinarily I will be selling this on the normal circumstances because I've seen that this was sweep of liquidity and then go over. And then this is a sign of rejection. So let's not go to that. We're talking of scalping here. So for me, so that's why I would say if you understand price action, it's still going to help you so much, right? Because this market has broken structure here. Then you should be looking at, okay, let me work with this other block. Do you understand? And this is a total displacement. So this crash supposed to come down to this point and be buying back. So you should have something like this. Now, this is the advantage of if you settle down to learn basic thing about the market, but you don't need to know everything anyway. You just to know basic, okay? So that means this market, you're looking at it to come down here and then buying up, okay? So that's what it is, okay? So now let's go on what we're looking for. So we're looking for this. So we come to this candle. So imagine is the first one you've already caught. So we're going to go to 30 minutes. Certainly, you know that the first 30 minutes is going to be bearish. Okay, yeah, it was. Look at it, very tiny, right? So let's look at it this way. So you're going to mark the close. That means the close is going to be below. Do you understand? So the close is going to be below. So somewhere here. So we go to 1 minute. So there we are on 1 minute. So you do not have this one did not close below. So this is the one that closed below. So that chances are there you're going to lose this trade, right? You see now? You're going to lose this trade. So because where is the spike that closed below? This is the whole body. So all of them just happen in sequential order. So sometimes this one can be more confusing, right? So if you take the Fibonacci retracement from this and then come down to this point, so you're targeting here. So you lose this trade, okay? Can you see now? You lose this trade because it actually spike, but you lose the trade. Look at your stop loss here, and it just took out your stop loss, and there we go, selling down. But there's something I always say: if you understand price action, you will still take this trade because you're going to see something on the 4-hour time frame when we open. We saw the market structure purely on how the market was actually going to play out, right? So because you're going to work with those things, but I'm just talking of catching spike and so you know that what you're going to lose is not going to be too significant, as it were. So imagine, let's look at this one. Okay, so imagine, let's look at this one. We'll go to 30-minute time frame. Okay, the first candle was bullish. You don't have a trade. Okay, so you want the first candle to be bearish, so you don't have a trade. Okay, so that's one thing you need to know. So let's take maybe pains what? Pains 999. Okay. Okay. Ooh, very bad. Not too much. So I'm not going to take this kind of a trade. It's going to waste my time for nothing. And so I have to avoid what's going to cost me unnecessary delay. Oh, new candle just formed now. So that means you will take it this way. And then, of course, you have to allow the first 30-minute candle close. Yeah, so that's one of the things. So, ladies and gentlemen, it's very simple on how to actually trade this market and be profitable. You don't need to give yourself unnecessary stress. You trade this market, you make money, you help yourself as much as possible. Does that make sense? Are you learning? Are you enjoying the market analysis and all the things I've just explained? Congratulations. So, Weltrade is simple to trade. I've just taught you all the things you need to know. If you don't have an account with us on Weltrade, take out the comment section. There's a link below. Register, verify your account, and let's make money together.